Good afternoon and welcome to BizTech's Asian Midday Market Watch. Our guest today is Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, and he's coming out of Singapore. Vishnu, as always, great to have you on the show.
Thanks for having me, Brian. Always my pleasure to be here.
Now, for a start, let's take a look at how regional stock markets are performing. We start with the SGX. The Straits Times Index is at 3,425.86. It's up 0.36%. Looking across the region, we've got the KLSE, which is at 1,599.11. It's down 0.26%. Now, Shanghai is at 3,208.12. It's down 0.13%. The ASX All Ordinaries is at 7,702.4. It's up 0.16%. The Nikkei is at 28,001.5. It's down 0.53%. The Hang Seng is at 21,651. It's up 1.15%. And rounding up the numbers, we've got the Kospi, which is at 2,732.74. It's up 0.1%. Now, Vishnu, what's your view on how markets have performed this morning, and is it taking a lead from what happened over the weekend?
Yes, I think to some extent it is. Although I have to say first that markets are a little bit of a mixed bag. And whereas what we saw over the weekend was US equities actually closed higher, though Nasdaq slipped. So there's some mixed movements there. But overall, I think markets are digesting a few things. I think on the Ukraine-Russia front, there's some relief there because over the weekend, President Biden, I think in a moment of passion, suggested that Putin shouldn't be in power, but I think that's been walked back to say that none of the allies or the West have strategies to have a regime change in Russia. So that brings down some of the risks there. And that also sets the stage for Russia, Ukraine to have some talks to see whether they can come to a resolution. Now, to be very clear, it's a very high bar, but at least I think in terms of the talks, they can try to make some progress. That's on one hand. But on the other hand, I think the other big thing that has happened over last week, which we sometimes lose sight given Ukraine and Russia, is an extremely hawkish Fed.
Okay, and let's take a look at some of the charts that you have in terms of the hawkish Fed, Vishnu.
Sure. And I think here, this chart here represents very nicely why Fed was ultra hawkish. So this chart here is the so-called dot plot, where the FOMC members see rates by the end of each of these years, 22, 23, 24. So that yellow bar you see there was where they thought rates would be back in December when they released the dot plot in December. And the March update for that is in purple. And the big takeaway here is that in December, they thought there would be 325 basis point hikes for 2022. Fast forward to March, they are now pricing in 7 rate hikes. Coincidentally, that's exactly where markets were pricing the Fed would be. Now that the Fed has caught up with the markets have decided to give the Fed the slip again, because the chart on the right tells you where markets, according to the OIS markets, where they price rate hikes to be. So whereas the Fed thinks they'll hike rates by a cumulative 175 basis points, markets think that the Fed could be hiking rates far more, between 225 to 250 basis points by the end of this year. That's staggering. And markets are in particular pricing in one, if not two, 50 basis point hikes between the May and the June meeting. So we've got 2 more meetings to go in the first half of this year. And markets think that very easily you can get 75 basis points, if not 100 basis points more on top of the 25 basis points already done in March. And that's where we're coming from, where the Fed does not back down in the face of geopolitical risks. If anything, higher energy prices is actually lighting the fire under the Fed, fueling the Fed, no pun intended, to become even more hawkish. And I think one more interesting slide I want to show without scaring anyone is what that has meant for the region. So if you take a look at these charts here, what you see is that the green bar here gives you the average in 2021. So in average 2021, how much foreign money flowed into these equity markets here. And you can see by and large, 2021 was supportive despite the risks. And the blue bar here shows on average weekly what the flows have been like since the Ukraine invasion started. And you can see there's been huge outflows from India, Taiwan, Korea, Indonesia as well. If you look at the bond markets, these two here are bond markets for Indonesia and Thailand. Of course, there are some outliers. Very interesting here is Indonesia, Malaysia, and Thailand are outliers where the inflows have improved after Ukraine risks not deteriorated, but we can attribute some of that at least to energy prices and how Malaysia and Indonesia benefit from that. And in Thailand's case, it's the prospects of more reopening leading to tourism. So there are peculiar factors, but the big capital outflow risk that we see here from Ukraine can get accentuated by a Fed that's turning or is thought of as turning very, very hawkish. So that's something to bear in mind.
And so then, what's the impact for Asian investors that as the Fed becomes more and more hawkish?
I think it's all about timing, because one thing we've realized, and this is not easy to execute, the thing that we've realized is that with geopolitical risks, as long as there's some resolution at the end or there's some kind of containment, typically where markets start off selling off equities, later on there is some recovery that falls due. So that means the big picture here is that we keep our fingers crossed that this doesn't blow out into a pan-European conflict. Then there could be upside left for equities. But what makes this particular terrain trickier is we need to navigate around a Fed. And our sense is that the Fed may start slowing down the pace of rate hikes, regardless of the market expectations by the time we go to the second half. So the later part of this year could present opportunities, but the caveat here is that we need to see geopolitical risks being fairly contained, and the Fed starting to take its, to dampen the pace of tightening that may come through. And for these cues, we need to watch, in particular, the May meeting, where the Fed may announce their plans for balance sheet runoff, or in other words, the pace at which they may drain liquidity from global markets.
Now, Vishnu, looking ahead this week and with a shorter time horizon now, what are key events and data points that we should be looking out for that could move markets beyond the geopolitical risks and interest rate risks?
So let me start with the elephant in the room that we missed out earlier. That was China, because Shanghai has gone into phased lockdowns. And so how China's COVID containment situation evolves can inform us on the mood around the markets, because there are many transmission channels for China. One can be through supply chain disruptions for the region. The other can be from commodity demand and generally how that buoys the market sentiments. And finally, of course, there's also the tourism impact, because as those who take a closer look have noted, it's very difficult to substitute for Chinese tourists, no matter how you look at it. So China would inform us of that. So that particular risk is playing out. In the G3, I think markets are still in the phase of digesting a lot of the information. So really headline risks on Russia and Ukraine will give markets a sense of how much relief they can see this week if there are some prospects of talks having some progress. Otherwise, Bank of Thailand is the focus this week to see how they navigate the situation around a hawkish Fed and the lingering risk. I think for now it's really Bank of Thailand and the wider markets included is wait and watch.
Now, Vishnu, as always, thank you very much for your insights and thanks for taking your time to be on the show.
Always my pleasure, Brian. Thank you for having me.
Now, we've been speaking to Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Please check out this video and podcast on our website, www.biztech.asia, as well as our social media platforms. Please like and subscribe to our various platforms. Thank you very much for tuning in.